Hello and welcome to TheoTrade. My name is Doc Severson and this is the Theo Night Report for Wednesday, July 27th. Right after the cash market closed today, we actually had Facebook reporting earnings, and you can see that from about a starting point of maybe 123 or so, right around the cash close. This thing shot up over 11 points. Finally rests so far about 131, so a nice move up, and as we'll see, well past a 1 standard deviation move. So Facebook was expecting 61.6 cents earnings per share and actually got 97 cents. So completely blew away their earnings. And this kind of reminds me how Apple used to do it maybe 4 or 5 years ago when Jobs was still in the chair. If we go back just a couple of days ago, we can see that the expected move for this week's options for Facebook was about 7.5 points with a starting point at about 121. So the expected move was up to about 128, and you can see that this is well beyond that. So again, back to Facebook here, 128 was about the expected move to the end of the week, and I think we just about doubled that. So it was about a 2 standard deviation move to the upside immediately past that. No surprise seeing what the earnings were. Again, 97 versus 61 cents. Now, if we compare that versus Apple, so the old guard now, so Apple's become this sort of old guard, much the way that Microsoft has been all these years, you can see that we expected for Apple about $1.38 and we got $1.42. So this is unlike the old Apple, which used to completely sandbag their earnings and then blow them out of the water, just like what we saw with Facebook this afternoon. So if we kind of zoom out on Facebook, you can see how this has sort of turned into this juggernaut. So it should be up there around 130 by tomorrow. And it just shows no sign in sight of stopping right now. So again, blowing out earnings at every turn. This is obviously not a sustainable chart, but man, as long as their earnings continue to keep blowing above expectations, this is going to be a huge source of target where people are going to have to chase after this one until they start to slow down. Going back over to Apple, you can see that this one has seen better days. I mean, it's still in an uptrend, even though this is a strong pullback on the monthly chart. What we're also seeing is that just this trend line here is going to be pretty formidable overhead resistance in the meantime, until the price is able to get above and beyond this. Now, descending patterns like this eventually break to the upside, But so far, it's not showing any ability to do so. And as long as Apple continues just barely squeaking by with their earnings and not playing the same old game, right? So it's going to be in this still pattern. And we probably have lower prices in store for Apple until they start to actually really blow out their numbers. And maybe, how about this, get innovative with their products instead of building a spaceship, building monument to themselves. So in other news today, obviously we had one of the big FOMC meetings. Today's had about as little drama as we've ever seen in one of these meetings because, again, like we said over the last few weeks, the Fed is out of play, at least for right now. Now, if the numbers start to improve, then we will start to see these numbers rise. So September is a great opportunity if they're going to do something, because this is one of the major meetings where they actually have the press conference. Typically, they like to make actions around the press conference so they can explain it, right? So there's an 18% chance that we will have a rate hike in September. That's really, in my mind, their last shot before the end of the year, because they are not going to hike rates just days before the November election. Just not going to happen. So now we get into the end of the year, and this is where we get into about a 37% chance of one rate hike. Actually, they could have a 6% chance of a 50 basis point rate hike. So this is starting to get into play now. And as we get into February of 2017, again, 37% chance of this occurring. So the Fed is going to be more and more in play as the economy and the world begins to strengthen. If not, then the Fed is going to be permanently on the bench, which may not necessarily be a bad thing in terms of risk management. Now, there's a few things that I want to watch when it comes to the overall markets. First of all, here's the Dow Jones Industrials. And over the last few days, actually, they've gotten a little soft. This is not exactly what I would call a sell-off. Certainly above, as we break into all-time new highs. A very common pattern to see is a retest of the breakout. So once you see a level like this, break out, pop above there, come back down and retest that from above and then take off. That's a very common pattern that we're seeing right now. So far this is playing in line with that. However, the Russell's having none of this. So the Russell is just on a tear right now. And even though it's below the all-time highs, that's one of the issues here, is that it got sold off about 30%, and it's having a violent rebound right now. So there is risk on when it comes to the Russell components, which is actually a relatively bullish signal that fund managers are willing to take this risk in the small caps. So one of the trades that I'm looking at recently is a trade that's maybe about 30 days out. And we're looking for a move from about this level, maybe up to about here. So not a whole tremendous amount, but that should be able to get us about 50%. And so far, we're just about halfway there on the trade right now. So this is a very common type of consolidation pattern where it just builds up energy like a coiled spring, and it just can't contain itself. Everything else here on every time frame is showing uptrends, and so we're just taking ourselves in with the major trend of this trade, waiting for energy to get stored up, and then it kind of goes along with the rest of the larger time frames. And it's that same trade logic that we entered one this afternoon on GLD. So again, not a huge trend to the upside. Again, we're still in a fairly strong downtrend overall on the monthly chart. However, we can still play within these swings. And right now we definitely still have an uptrend on the weekly chart. Nice little consolidation pattern showing up on the daily chart, breaking higher. We can hit our target by just the price retesting this area above. So we don't have to like climb into these, major high pivots up here to be able to get a decent return on this trade. And I'll close out today by talking about calendar spreads. So this can be a replacement for an iron condor during very low volatility action, because the problem is with low implied volatility, we don't get the wings out very far on our iron condors. And when we consolidate, next thing you know, boom, we get blown through again. And it becomes a frustrating experience trading iron condors in a low volatility environment, whether or not it's a break out or break down. Sooner or later, you're going to get a leg run over, and it's not very healthy. So the calendar spread can work well as a replacement for this, but we have to be very careful to use it in the right circumstances. So what we want to look for is a scenario where, similar to what we saw with the IWM or the Russell, that we get into a kind of a stair-stepping mode here, where the price ends up going sideways for a number of days or perhaps even weeks before it breaks out to the next level and just repeats this. So we saw much of this throughout 2013, 2014, bits of 2015, before we got into more corrective price action. So if the market does sustain itself into the new highs, it will more than likely fall into this type of character. And so this is why we're brushing up on the calendar spread, which we really have not traded for the last couple of years, because we can take very quick profits around the money with these, because time value decay occurs the fastest right at the money. So instead of setting up an iron condor where we're picking up nickels in front of the steamroller and waiting for weeks to get our 10% return on this, we can set up something closer to the money. Obviously, we have to have the right character and the right price action for something like this, but it can be a nice substitute, a nice limited risk substitute for the iron condor during these times. All right, folks, that is it for tonight's report. Thanks for listening, and we'll catch you tomorrow.